Would it be ridiculous to say it could even help you pay off your home? Hey, Mortgage Wise family, ever feel like your money is lazy? It's just sitting around doing nothing? You work hard, but your dollars, they just sit in your checking account until the bills go out. Most people don't even realize this, but over the next 5 years, more money will flow through your checking account than what you owe on your mortgage. Crazy, right? Today, I'm going to show you how you could make every dollar multitask using the all-in-one loan, a revolutionary mortgage strategy that turns your checking account into a home loan secret weapon. Look, how open-minded are you to about letting your income do double duty, crushing debt, and yet staying available for life's needs? Stick around, because by the end of this video, you will see your boring old checking account in a whole new light. Let's first talk about lazy money. The problem with it is this: most people, they deposit their paychecks into their checking account, pay some towards loans, and the rest sits waiting for bills. It's safe, but it's inefficient. Why? Well, in a traditional mortgage, any extra cash that you put towards your loan is gone. It's locked away in the bank's vault of equity. Sure, it lowers your balance a bit, but you can't access that money in an emergency without refinancing or getting a line of credit. On the flip side, if you don't pay extra, your cash sits idle, earning almost nothing while your mortgage accrues interest on the full balance. It's a lose-lose situation. Either forego liquidity to pay down the loan, or keep flexibility but pay more interest. Look, this is what finance geeks call opportunity cost. Every dollar you send to the mortgage is a dollar you can't invest or save elsewhere. And every dollar you don't send means more interest is piling up. No wonder it feels like a catch-22. This is the second part of this here. It's called the inefficient status quo. So let's talk about how mortgages normally work. You skimp and you send extra payments hoping to shave off a few years off your loan. It will chip away at the debt, but at the cost of your financial flexibility. Picture this: you throw a $10,000 bonus at your mortgage principal. It's great, your balance drops, but the next month, when a surprise expense hits, that $10,000 is trapped in the house. You'd have to borrow it back at who knows what terms. Traditional debt payoff is one of the most inefficient and risky methods out there. You're forced to choose. Should I save this money for a rainy day or dump it into my loan? It's a stressful balancing act that can lead to indecision and regret. But if you don't put all that extra cash into the mortgage, your bank account might be drained when you need the money the most. So, introducing the checking account hack, right? It is the all-in-one loan. What if you didn't have to choose between the two? Imagine a mortgage that works like a big checking account. That's the all-in-one loan in a nutshell. A first lien home equity line of credit that combines your mortgage and your checking into one. Here's how it works in simple terms. All income goes in first. Every time you get paid, deposit it into your all-in-one account. This immediately sweeps into your loan balance, temporarily paying down the principal. Your loan interest is calculated on whatever balance is left each day. So while your money is just sitting there, you're effectively prepaying your mortgage and shrinking the interest cost as long as you can. Look, interest is calculated daily. The loan uses simple interest on the remaining balance each night on your loan. So when your balance is lower, you get charged less interest that day. If you string together days, weeks, and months of lower balances, and you can see how interest costs drop significantly over time. This is money saved without any extra effort. Your paycheck is just doing more while it waits to pay the bills. Now, you have free access to those funds. Here's the kicker: your money isn't locked away. The all-in-one loan is completely liquid. If you need to pay a bill or cover an emergency, no problem. You draw funds out, write a check, use a debit card, transfer to your checking account. Whatever you need to do, you can do it in this account. It's up, you can use it up to your credit limit anytime. It's 24/7 access to your money, even the dollars that you parked in the loan to pay it down. You maintain a financial safety net at all times. Look, this is a cool part of this. It's automatic, flexible payments. There's no fixed required payment of principal. No fixed required payment of principal. So typically on this loan, you're required to pay interest due each month, which thanks to your deposit is recasting at a lower and lower amount each month, each night. You can pay additional principal whenever you want to or not, and there are no prepayment penalties. Each deposit effectively becomes an immediate prepayment, but one that you can reverse if life happens. In short, the all-in-one loan, it lets you have your cake and eat it too. Every dollar of income attacks your mortgage principal when you're not using it, but it's standing by for you when you need it. No other mortgage works like this one. This mortgage is completely underutilized out there. It is a superpower. It's a superpower loan. But let's circle back to that checking account of yours. Under a conventional loan, it's just a pass-through account. That's what you're used to. But with the all-in-one loan, your checking account becomes a weapon against interest. You make your money work harder for you by reducing the principal balance every day your cash is sitting idle. Efficiency is the result. You're not letting dollars lazily around earning 0% in your checking account, but simultaneously, you're paying 5-6% interest on your mortgage. It's lower and lower. You're not paying those high interest rates. In effect, your cash earns your mortgage rate as a return by saving that in interest. For example, if your loan rate is 6%, every $1,000 of idle cash that is sitting in your all-in-one loan is like earning 6% APY risk-free towards your benefit, and it's not taxed. That's probably more than your bank's saving account is actually paying you. And unlike making any big extra mortgage payments, you retain the flexibility. If an unexpected expense comes up, if you don't need to put a surprise $5,000 car repair on a high interest credit card just because you threw all your savings into your mortgage, instead, you simply withdraw the funds from your all-in-one loan when you need it. It's your money. There's no more either or choices. You can do both. You can build an emergency fund and pay down debt at the same time. This is peace of mind, and it's priceless. You're paying, you're pursuing financial freedom without living on the financial edge. Look, here's a real life example. Would it be ridiculous to imagine how this plays out in real life? Let me give you a scenario. Suppose you normally keep $5,000 in a checking account as a cushion for those emergencies. In a traditional loan setup, that $5,000 sits in your account doing nothing for your $300,000 mortgage. But you're still being charged interest on that full $300,000. But on the all-in-one loan, that $5,000 would immediately offset your loan balance to $295,000. You're now only accruing interest on $295,000, not $300,000. Over just 1 month, that $5,000 deposit could save you roughly the interest of on $5,000 of principal, and that's not much. It's probably around $25. But multiply modest savings like that by every dollar, every day, and every time that you're doing that, you're saving thousands of dollars in interest each year. Meanwhile, you need the money, you pull it back out. There's no harm done. This strategy has helped real families. Many homeowners report that once they switched to an all-in-one loan, they saw their interest costs drop and their balances started shrinking fast. Their monthly payments recast lower as well. And since the loan balance is coming down, it's like accelerating your payoff invisibly in the background. One family even described it like putting their mortgage on autopilot, all while keeping their same lifestyle. They didn't spend less or earn more. They just made their money flow differently, and suddenly they were years ahead on their mortgage. Look, I want to keep this real. It isn't magic. It's not free money. You still owe what you owe. The difference is how you pay it and when you pay it. But by syncing your debt with your income, you slash wasted interest. Think of it this way. The bank has long used your income and the timing of that income against you, charging you full interest even when you have cash on hand. The all-in-one loan lets you turn the tables and use your income timing against the bank's to cut your costs. I love that. So now I want to switch it up a little bit and I want to keep it compliant. The all-in-one loan is a type of home equity line of credit, and it's not a traditional fixed mortgage, so you don't have that same payment every single month. It does come with a variable rate of interest. It changes every single month. That means your rate can move up or down depending on what the market is doing. You should be confident you can manage your budget even if rates change. So I'm not sure if this loan is for you, especially if you aren't disciplined with credit, because having access to your equity, it can be risky if you overspend. But for financially savvy folks who manage their money well, this can be an absolute game changer. Look, you always have to review the official disclosures and understand the terms. For example, how the index works and what is the margin? Any caps or any fees? Is there anything extra from a conventional loan? Look, this isn't financial advice. It's just a smart option to consider. I've done it. I know. I love this loan. And of course, individual results, they're going to vary depending on your situation. You might save a ton of interest and pay off years early, or you might simply enjoy that flexibility. It really depends on how you use this loan. But before you make up your mind, let me say this. Your checking account doesn't have to be just a bystander in your financial life. With the all-in-one loan, it could be your unsung hero, and it could be quietly knocking out the interest and speeding your path to financial freedom without sacrificing your safety net. If that idea gets you excited, do me a favor, hit the like button and subscribe to Mortgage Wise for more high energy insights on the all-in-one loan. Share this video with that friend who's bragging about their low 30-year fixed rate mortgage, but keeping piles of cash under the mattress. They need to hear this. And one more thing, I'm not sure if this is for you, but if you want to see how the all-in-one loan can work for your situation, click the link below. We're offering a special offer to my Mortgage Wise viewers, $250 towards closing costs if you decide to get an all-in-one loan. That's $250 free for just getting smart about your mortgage. Would it be ridiculous to take 15 minutes to check it out? I'll let you decide. Thanks for watching, and I'll see you on the next